Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Tina Fordham we can talk about. She populates Mayfair and the fancy climes of London. She joins us now from Fordham Global Insight. And far more importantly, as a visceral understanding of where the vice president came from. When you come out of San Francisco State, you understand San Francisco. Tina, from where you sit in the wild, liberal, progressive hell of California, where does Vice President Harris fit in?
Well, she's a hometown girl. I'm a San Francisco Bay Area native, but in London for 22 years. So I think the first thought I have is that she's definitely not going to be choosing Gavin Newsom, the California governor, as her running mate. So that's off the table. She is going to try to work hard to strengthen her bona fides as a prosecutor and as a California district attorney. She's going to try to be tough on law and order, I think. But I think what's most important here is that what we've seen with the momentum since Biden's announcement is the huge appetite for just some energy in this race.
So is that energy, how can Vice President Harris take that energy and form a real coherent message? What do you expect to hear from her as a presidential candidate?
Well, it certainly looks like her operation has hit the ground running. If you're not online or on what we now call X, you're missing out because you can see in real time how her campaign headquarters, virtually have been set up with some branding echoes that are very familiar to Gen Z and younger people. There are a lot of, politically homeless people, disenfranchised constituencies, never Trumpers, people who are open to ideas. And I wonder if the compressed time frame doesn't actually work a little bit to her advantage.
So what do you think? I mean, I guess one of the first decisions she needs to make as a candidate is to select a vice presidential candidate. How do you think she'll go there?
Midwestern white guy. I think that has to be the choice. I don't think it'll be Pete Buttigieg. That's too much change, too much perceived progressiveness on one ticket. But Tom mentioned Mark Kelly, a senator from Arizona, NASA astronaut, naval officer, pilot, husband of Gabby Giffords. He would be an interesting choice. And obviously Arizona is a key battleground state. Bashir is another interesting candidate, could go head to head with J.D. Vance on Appalachia. There are some good names in the mix. Right. But that's the kind of ticket that I would expect to see, someone who would complement Harris and ideally could deliver a big swing state.
Tina Fordham, we are advantaged at Bloomberg with Wendy Benjaminson, who is in Washington, D.C. She, folks, is the definitive old school newspaper editor, supporting young reporters, nurturing people. And I asked her this question yesterday, Tina. You are, without question, the most qualified transatlantic voice on this. In England, nobody's sweating that there's Prime Minister May or even the train wreck that was Prime Minister Truss. No one's sweating Marie Le Pen is a fixture within French politics. Or the reality of Angela Merkel, Paul, what was it, 14 years, I think,
Yep.
is chancellor. Tina Fordham, why does America have so much trouble electing a woman president from both party persuasions?
It's remarkable, and I'm not sure, guys, that that Americans really appreciate what an outlier we are in being seemingly unable to elect a female head of state. As you say, the UK has had 3 female prime ministers, one only for a few minutes, but nevertheless, and numerous OECD countries have had. So the US is an outlier. But again, I do think the wrong question is America ready for a Black female president? I think the question has to be in this, fairly high stakes race, whether the United States wants to re-elect Donald Trump or wants broad political continuity, which a Harris plus Midwestern guy ticket would bring.
Tina, how do you think Kamala Harris will stack up against one-on-one against former President Trump, whether it be in debates or just the day-to-day messaging?
Well, the first thing is that as a former prosecutor, she's tough. Watch the replays of her questioning on during these Supreme Court hearings for Brett Kavanaugh. She's perhaps not as smooth and slick as a Bill Clinton, but she's a tough questioner and respondent. What is her messaging going to be? I'm not Donald Trump. Does it need to be much more advanced than that? She's the continuity candidate. Interesting to me, though, was that Trump seemed to be, backpedaling from the next debate, September 10th. Did you see that?
Yeah.
And also complaining that they want their money back as they prepared for a campaign against a different guy.
Tina, this is just so important. My theme today focuses on turnout. It's not my opinion. It's fancy people like Tina Fordham saying turnout it really matters. Tina Fordham, how do you suggest the former president and the senator from Ohio enhance their turnout after what we saw in a 90-minute convention speech and after what all the emotion of the assassination attempt and that? How do they enhance their turnout against the vice president?
Probably by stoking fear about what she might do. The difficulty for them is that they are going to have to resort to some pretty unpleasant language and tactics to do so. Do their supporters care? It's hard to say, but it can't be underestimated how they will have been somewhat blindsided about this change in the ticket. Now Donald Trump's the old guy in the race. And can Trump continue with the momentum he's had in attracting, Black men and others? The constituencies that were pro-Obama, that came out for Obama,
right,
weren't coming out for Biden. Will they turn up for Harris? That's what the next 6 weeks in particular is going to be about. It's also why I think the shorter time frame just helps. Less time for everyone to get bored.
I agree with this. It's very British, okay? And only Tina Fordham in London could say that. Tina, fabulous. Thank you so much. Tina Fordham, of course, iconic at Citigroup, Fordham Global Insights, out of London. Leslie Vinjamuri out of the Wesleyan Complex is at Chatham House in London, hugely prestigious when she speaks on America, the United Kingdom, and the continent. We're thrilled that Dr. Vinjamuri could join us this morning. Leslie, the market really hasn't moved across equities, bonds, currencies, commodities. What does that signal of our political system?
Well, I guess some sense that this is going to be continuity, that there's a sort of wait and see attitude, probably also. It doesn't feel like continuity to those of us who are looking at the political world. It seems like a rather significant moment of change. But I guess, if you're trying to game this out from the markets, that really, whether it's Joe Biden or likely Kamala Harris, the economic policy is likely to be one that's continuous.
Lord O'Neill, Jim O'Neill of Goldman Sachs, with his contribution to Chatham House, told me that people like you at Chatham House are still dipping a quill in the ink pot to write when you can. And the answer, Leslie Vinjamuri, is Trump and Harris have to deal with the modern media. This isn't Eisenhower-Stevenson of 1952. How do they deal with the speed of news today?
Yeah, this is extraordinary. I mean, and every single time somebody endorses or uses a specific word, it's on the media. People will now be watching every move that Kamala Harris makes as she takes her campaign forward and looking to see whether the Democrats unify behind her. And they're going to do that all not only on national television, but on world television. And people are also looking to see how Donald Trump will signal his response. Clearly, they're going to have to shift their campaign strategy. I think for many people, they will be trying to get a sense of who the vice presidential candidate will be for Kamala Harris, assuming she moves forward, which certainly looks likely. And also what kind of leader she would be. What would her policies be, not only at home, which I think is more well known, but especially on the global stage. And here she's relatively unknown and has relatively little experience. That said, she's had a very strong voice. With some difficult moments, not least in those early days of her role as vice president when it came to immigration and the southern border.
Leslie, was this a good weekend for the Democratic Party? Was it a weekend where they turned the page, or was it a weekend showing the disarray of the party? How do you view this past weekend? What happened?
I think the disarray for the Democratic Party played out over the last 3 weeks since that very difficult presidential debate. And yesterday was really a moment of clarity where President Biden made a decision that people had been waiting for and wondering about for quite some time, and where he quickly thereafter endorsed Kamala Harris. And then we saw many leading figures, including some of those who would have run against her, saying that they supported her. And so I think people are breathing, tentatively a sigh of relief, knowing that that moment is over, understanding that there's still great uncertainty ahead as to whether or not she can actually compete. And, we watched the Republican National Convention. We watched former President Trump and J.D. Vance double down on a very powerful, but actually a very narrow agenda and speak really primarily to their base, and broadening that out will be essential.
That's exactly where I wanted to go. I mean, I'm playing off of fabulous research on who votes, how we vote, when we vote from Pew Research. And Dr. Vinjamuri, everything's focused on Harris now. I get that. It's in the news. It's new. It's fresh, ratings and all that. Forget about it. How does President Trump and Senator Vance move center off the message of Milwaukee to get the marginal vote? Or do you perceive they have absolutely no interest in doing that?
I think they actually do have some interest. If you've watched President Trump move his position, sort of dial it down a little bit on abortion, for example, he's tried to distance himself from Project 2025, which many people have viewed as very radical or extreme. And so there's already signs that he recognizes, Donald Trump is always looking to see where he can make something stick and where he can get a win. He likes to think of himself as doing deals. And I suspect that they are really, recalibrating in a very significant way. If they're smart, they will recognize the diversity that J.D. Vance's wife brings to the broader platform. Not officially, of course, but that's a very significant female presence in the platform. They're low on female presence at the top, and now with Kamala Harris on the ticket, that is a significant point of a difference between the two parties. So there's a lot of things but they are going to be recalibrating. They clearly chose J.D. Vance in part in contrast to President Biden's age.
Leslie, should voters read anything into the fact that we have not yet heard from former President Obama?
No, not at all. President Obama is wise to know that he shouldn't get out in front of the party. He has a very specific role to play. He's tended to come in on these major decisions once he can read the room and then try to shift it subtly. He has said that he believes that the Democrats should have a process for the next candidate, but he hasn't said an open process. And that's a very important distinction for a former president who chooses his words with great care, is very meticulous and detail-oriented. So I think he is waiting to see where the party goes. The one thing that all Democrats at that level, certainly there aren't many at that level, but all Democrats know is that the most important thing, the single most important thing for the party is to choose a candidate and to be absolutely unified behind that candidate. People have watched the party disintegrate. It's looked incoherent for 3 weeks, and now they really need momentum if they're going to stand a chance of victory in November.
Leslie, thank you so much. Dr. Vinjamuri with the Chatham House. Edward Yardeni, Yardeni Research, and I'm not going to mince words, folks. He writes like it's still C.J. Lawrence of a few years ago, and you are advantaged with the Yardeni report that comes out. He's even got some people helping him out now. He was, like doing it by himself. And we're thrilled that Ed Yardeni could join us now with his optimism on the American experiment. Ed, reframe that to begin with right now. Do you actually model out, if I extrapolate, a Dow Jones Industrial Average over 50,000 a number of years out?
Yeah, I think we could get to 60,000 by the end of the year. We're at 40,000. It's not a stretch to believe that over the remaining decade we could get to 60,000. And I've got the S&P 500 going to 8,000 by the end of the decade. So it's a bull market. Look, just take a look at a long-term chart of the S&P 500, and what you see is that bear markets occur every now and then, but they don't last very long, and that the fundamental trend of the market is upwards along with the economy.
So, to get to those kind of levels that you're talking about, does it have to be a tech-led U.S. stock market?
No, it doesn't. Though since the beginning of the decade, I've noted that there's a certain rhyming between the 2020s and the 1920s. And I do think that there are similarities. Hopefully it doesn't end as badly as it did in the 1920s. But for now, I think we're in the roaring 2020s. The technology environment is very conducive to that. But look, I think every company now is a technology company that you either make it or you use it. If you don't use it, you lose it. So I think technology is a major driver of the economy, but it doesn't have to be the technology companies are the only ones that benefit.
We had a little bit of I think a lot of folks are calling a rotation maybe out of some of those tech names into some other sectors, maybe even in some small caps had some real strong outperformance over the past couple of weeks.
Yeah.
What'd you make of that?
Yeah, well, it's been a very confusing couple of weeks. It really started, I think, on July 11th with the better than expected CPI convincing everybody, including the Fed, that they were going to lower interest rates probably in September. And so instead of just kind of debating how many rate cuts will eventually occur, now there's almost 100% probability agreement that they're going to start cutting in September. And that led to a tremendous rotation out of the Magnificent Seven and into some of the smaller cap stocks. But I think the other event that occurred is the Biden administration announced that they were going to take some draconian measures against companies that sell semiconductor equipment to China. So it's been a whole mix of things going on here.
Ed Yardeni, I want to go back to introductory economics at Yale. You get there and you got to toss out a core equation, y equals C plus I plus G, and you throw in international exports minus imports.
Right.
You have been a multi-decade optimist. There's no question about that. You found your moments of gloom, but they're rare, rare, rare. Once again, Atlanta GDP now, a present indicator, tells the gloom crew they're wrong. Where in that core economic function did the gloom crew get growth wrong?
Well, look, I think that it really started in 2022 when the Fed started raising interest rates. March 22 through the summer of 2023, the Fed raised the Fed funds rate by 525 basis points from 0 to 5.25%. I think where the gloom crew was perfectly logical, was in expecting that would cause a recession. It kind of makes sense. You get that kind of tightening, you get a recession. I think what they missed, though, is that we started at zero. In other words, sure, the Fed tightened, but they also normalized. I mean, it was zero that was the abnormality, not 5.25%. And the economy's proven to be remarkably resilient, notwithstanding that tightening.
Did you ever teach Econ 108 at Yale? I mean, Yale has 3 different levels of economics. They got Econ 115 for nerds. They got Econ 110, which is for PhD track Yardeni types. And then they got Econ 108 for theater majors. Did you ever teach that at Yardeni?
Well, what I would teach if they took me back there as a professor is common sense. I think there's too much math being taught to economists and not enough common sense, and certainly they don't get their hands dirty enough with the data. Right. There's so much data out there that they don't have a real sense of it. So I think you've got to start out with the raw material, which is data. So start out with the data and then come up with the theories and the models instead of the other way around.
And Paul, shout out here on someone that really helped form Bloomberg on the economy and Bloomberg surveillance. Mm-hmm. Tim Besley at Yale before LSE single-handedly turned around common sense study of economic history in America. Besley at Yale was a crucible who said, stop with the math mumbo jumbo and teach Jevons of the 19th century.
So, Ed, what do you make of this economy here? I mean, as Tom was pointing out, the Atlanta GDP number looks pretty solid. Inflation seems to be coming down. We have a Fed that's probably going to be cutting rates at some point. What do you tell your clients these days?
Well, I tell them that we're in a bull market. We had a bear market back in 2022 as there was widespread expectations of a recession. It turned out to be the Godot recession. It was a no-show. And typically, we get sell-offs as we had last week. And the question is whether they become corrections. And they become corrections when there's fears that a recession's coming and then it doesn't show up. And then we get bear markets typically when a recession does show up. What was unique about 2022 is we had a bear market without the recession showing up. And I think we're in a bull market. I think this bull market, look, I can't guarantee there won't be some corrections or even another bear market along the way. But I'm sort of in the Warren Buffett and Jeremy Siegel camp that stocks are meant to be held for the long run.
Ed Yardeni with us. We're going to continue an entire half hour with Ed Yardeni. Paul, get one more question in with Dr. Yardeni. I want to come back and talk about the new model of these big tech companies.
Ed, I'd love to just have your opinion on valuation. What are you telling your clients these days about the valuation of this market?
Well, I've been doing this for a while, and I feel, one of the reasons I like being a strategist, it's easy. You only have to predict 2 variables, the earnings and the valuation multiple, PE. And, getting them right, of course, is the challenge. But earnings seems to be easier than the PE. PE is like beauty. It's in the eyes of the beholder. I guess these days of political correctness, we should say a talent contest. But the reality is that the valuation multiple can be elevated as long as there's no recession up ahead here. And it's particularly elevated for the magnificent take them out. You get something more reasonable like 18 or 19 for the S&P 493.
I am going, Ed Yardeni, back as a lesson, and I'm reading Michael Mauboussin from Legg Mason and Credit Suisse Forward, now at Morgan Stanley, on our world torn asunder in finance and investment. And part of that, Ed Yardeni, and you've been brilliant at this, of moving on from the conventional wisdom, say railroad stocks and Graham, Dodd, and Cottle. And one of the things Michael Mauboussin talks about is the new network effect, which is Robert Metcalfe, who invented the Ethernet, and that the network effect of what Apple does, what Google does, what tech does, is radically different than what Johnson & Johnson does, or Colgate-Palmolive, or Endicott Copper from another time and place. Do we understand in our fear and gloom the new network effect over the last 20, 30 years?
Well, I think what technology companies do better than anyone else is what Joseph Schumpeter called creative destruction. They are constantly innovating, they're constantly bringing out new technologies, and as soon as they become hits, they're working on destroying them by creating something new or the next version of that technology. So
Right.
it's a extremely competitive industry. The margins are great initially, and the margins kind of evaporate very quickly as they move on to the next iteration of the
Right.
innovation.
Will
And we all,
AI,
we all benefit from that.
yeah, will AI creatively destruct?
Well, artificial intelligence is certainly artificial, but I'm not convinced it's all that intelligent. But I want to be very precise about that. I think there's two versions of AI that we need to consider. One is so-called open AI, and the other one is something that I would call closed AI. Open AI basically is open to all the information available on the internet. And as we know, there's a lot of junk on the internet, and OpenAI is going to contribute to it. It's going to kind of start making up some stories and some sources, and I mean, we can fact check it along the way, but it's still going to be making a lot of mistakes. Closed AI is basically big data on steroids and speed using GPU chips as supercomputers. Elon Musk is a genius, and he figured out that maybe we don't need quantum computers. Maybe we can do fast computing, supercomputing with just the video chips that NVIDIA makes. Just slap them all together, and you get a supercomputer. So I think a combination of massive amount of data placed on these supercomputers is, in fact, going to be a major productivity enhancer for every company that has a lot of data.
Forecast for the indexes, how much of that is earnings driven versus Fed driven? A lot of investors are not sure what to really focus on as we get into the meat of this earnings season.
Well, I think at this point it's got to be earnings driven. It's hard to imagine that valuation multiples over time can get a lot higher than where they are already. We're talking about the Magnificent Seven or at a 30 forward PE. We're talking about the S&P 500 at a 22 forward PE, and excluding the Magnificent Seven, we're at about 18 forward PE. So valuation's already pretty rich. I don't think it necessarily has to take a dive, but I think I'm looking at earnings as being the driver of the bull market from here on.
Does this market for the longer term pull need a pullback here of 5, 10, 15%? Is that something that you expect in the, 6 to 9 month time frame?
Yeah, well, if you look at the long history of the stock market, bear markets don't happen that often, and corrections don't happen that often. I guess just over the past several years, we got used to the idea that corrections occur on a regular basis, but they're not inevitable. History shows that some bull markets had one or two. They didn't have, five corrections along the way. So it's not inevitable that we have to have a bear market or we have to have corrections, but you have to be realistic. They do happen along the way, and they're hard to forecast. The geniuses who tell you when to get out at the top more often than not forget to tell you to get back in at the bottom.
I got to get back to the one final question, Yardeni. I got to get back to the trenches call. Everybody's in the trenches on this. Everybody's got a different prism, different view. And then Friday happens. And Lisa Mateos told me this. Friday's when the gloom crew shows up. They publish for the weekend, etc. How do you synthesize intelligent discussion from those cautious? How do you read the cautious fear crew in a constructive way?
Well, I think they do a great job. The problem is they just have this bias towards being perma bears. And I guess I've been accused of being a perma bull, but I think that's a consequence of reading what the perma bears are saying and just trying to provide some balance. So if you provide some balance, you come out as a perma bull. And again, if you look at the long history of the stock market, it makes more sense to be bullish on more often than bearish. But the crew, I think, provides some very good intelligent analysis of what could possibly go wrong.
Right.
And then I step in and say, okay, well, where might they be wrong?
Ed Yardeni, thank you so much. Congratulations on your call from October of 2022. I call it the Yardeni Ankampur. I couldn't just say Yardeni. We're thrilled Andrew Slimmon could join us from Chicago this morning. Andrew, I'm going to take a well-known portfolio. 56% is in their top 10 holdings. I'm going to round up and down, folks. Facebook, 14%. NVIDIA, 8%. Microsoft, 6%. Amazon, 6%. Ozempic, Eli Lilly, 3%. Apple 3%, except they've got 9% in Berkshire Hathaway. So Apple's easily out with the Berkshire Hathaway piece. It's 6%. Andrew, is this any way to run a portfolio, or do we need to get used to large cap concentration?
Good morning. Yes and no. On the one hand, the reason for yes, this is a way to run a portfolio is, a simple statistic is the Magnificent Seven stocks comprise 30% of the S&P. But if I look at their earnings growth over the last year, of the S&P, those seven stocks have comprised 89% of the earnings growth. So the point I'm trying to make is, hey, the fundamentals of these companies validate big positions in them because they are some of the best performing, fundamentally driven stocks. And so it's really tough to say, I should sell these stocks just because they're big weights when, I look at what's, my success and over time in this business has always been focused on what companies are doing less so than, kind of top down. That's the yes. The no of it is no, to the extent that these stocks are all highly, highly correlated to each other. They move together. And we have learned in the last week and a half that when there is a rotation, you better own stocks in your portfolio beyond just mega cap tech because you're going to hurt your investors. So yes, fundamentally, but you better go find some other good, fundamentally driven companies that are not all correlated to mega cap tech.
So you bring up the correlation, Andrew, and that brings up a risk that a lot of investors talk about, which is, boy, if any of these big names, whether it's an NVIDIA or Microsoft, disappoints either on earnings or guidance, that could bring not only that particular security down, but also the broader market. Is that a valid concern?
Absolutely. We've learned that. I'm dating myself. I've been in this business a long time, but that's what caused the end of the dot-com bubble is stocks. It was greater and greater concentration. Stocks got expensive, but most importantly, they started missing sales estimates. They weren't the expectation of the CapEx spend in the late 90s ran out of steam. And that because those stocks had such big weighting in the S&P, it brought down the S&P, although, the value part of the S&P did just fine. So yes, I think fundamentals matter, but pay attention if in fact these companies start to say, hey, you know what, our customers aren't spending as quickly as Wall Street expected on this tech build out. That's going to be a problem for the market.
Paul, Google, in the pandemic, terrible revenue growth, 13%. They rebounded in 2021, 41% revenue growth, then 10%, then 9%, then 12%, modeling out 2025, 11%. I'm sorry, it's double GDP, double nominal GDP revenue growth, and it accumulates over a number of years, and that's how Andrew can buy the Chicago Cubs.
That's exactly right. It's compounding, and it's YouTube, Tom. There you go. So, Andrew...
They might be on sale right now, Tom.
Andrew, if I want some non-tech correlated exposure and some strong earnings behind it, where do I look?
Well, I mean, look at just all you have to do is very simple. Go look at what's worked, what's outperformed the market since the CPI print came out that Thursday, when the market said, oh, wait, maybe the Fed will cut in September. It is financials. It is industrials, right? I think following the Infrastructure Act, because I don't think it really matters who's president, we're gonna fulfill the Infrastructure Act. Those stocks have all worked. So I sit back and go, thank God for our portfolios. We have understood that these mega cap tech stocks are doing great, but when there is a rotation, you better make sure you own some other things. And I've said for a long time, I think the industrials are a great balance versus mega cap tech.
How much cash in a portfolio, Andrew, right now?
Well, look, I run long equity portfolios. If Tom Keene allocates to my portfolios, he's not allocating for me to carry 30% cash. I'm supposed to be your equity guy.
Right.
I think the market is going to continue to rally until we get through the second quarter earnings, because I do think they're going to be good. But then I get nervous as we get into August, because there's kind of a lack of fundamental news. The other thing that I would tell you is, at a time when seasonally it makes sense to kind of get a little bit more conservative, if you look at what's worked, not only value, but it's the highest of the high beta stocks. Doesn't seem to me the time of year you want to chase high risk stocks.
One final question, 30 seconds. How come the White Sox are so much fun to watch, and the Cubs, it's like pulling teeth? What is going on in Chicago?
Because of expectations. The Cubs are expected to do well. No one expects the White Sox to do well.
There we go. We'll leave it right there. Andrew Slimmon, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.